dawned on me that I had this gal that I had doing spreadsheet stuff that had phone experience. And so coming back from KeysCon, I immediately got her on the phone, and within like 3 days, she revived a lead, and that's the one that we're going to list on Thursday.
What's going on, guys? On today's episode of the Collecting Keys podcast, we are here with another episode of the Scale Show, and we are welcomed by Wes Steimel. Did I say your last name right? I forgot to confirm ahead of time.
Yeah,
nailed it. Perfect. I'm going to add that one to the like my little star chart over here.
Was that 3 or 4?
Yeah, three or four out of like 300 attempts. But we have a longtime Scale member here who I'm super excited to have on the show today, because you are somebody, man, that I would say like the way that your business has been built out is one of like, I would say the most relatable sort of patterns to so many people, because when you joined Scale and, we first met each other, you were doing deals, you understood the fundamentals, and you've just been trying to figure out how to do more, how to get out of your own way a little bit, how to optimize, how to balance like flips and wholesales and everything else. And the way that it's all come together for you so far has been really fun to watch. And you're like one of the people that I would say is like a good operator and has so much potential, and we just sort of need to crack that nut to take you to the next level. You're like the perfect example of that, right? So dude, thanks for having me on the show. To get us started, why don't you give us a little like 3-minute rundown, who exactly you are, where you're based out of, and what your team and business currently looks like.
Sure. Yeah, I appreciate you having me. Wes Steimel, my company's Rent Home Buyers. I live and work in the Kansas City market. For those of you who don't know, Kansas City is both in Kansas and Missouri. So we market to both sides of the river, KCK, KCMO, and then also I do some marketing into St. Joseph, Missouri, which is a market of about 75,000 people, about 45 minutes north of town. Lower price points. You're probably talking $125,000 type price points. Good rental market, was fantastic 2 years ago. It's not so much anymore, but it's a little less competitive than Kansas City. So,
yeah, I feel like the Kansas City market going back, I don't know, 6 or 7 years ago was like where everyone was going to buy like cash flow or like turnkey properties. I feel like it was Kansas City and Memphis. I heard about a ton for like these large, I don't say like people trying to buy portfolios. They're looking for like 1% rule or 1.5% rule properties.
It was that those turnkey providers really hit those markets heavy. I remember being pitched those a lot.
Yeah, like all the time. And so does that still sort of exist? Like, you're still seeing those numbers there, or is it a little bit different now?
The 1% rule is moved out of. So I started buying rentals in 2018, I believe, and I was able to buy some 1%ers in good parts of town. Now the 1%ers are available in the hood. Those used to be 2.5% type properties, 4 or 5 years ago.
Awesome. And then what's your current exit strategy mostly?
It's a mix, like a lot of guys, I'm trying to monetize every lead however I can. So I'd say we're probably 60% wholesale, 40% flip, really not keeping anything at the moment. There's not a lot that makes sense, and just trying to keep the money moving. I picked up one rental last March. That was the last one that I took down.
You start doing more deals, and you start realizing why people buy for tax purposes, though, too.
Right.
Wholesales and flips are not tax very friendly. But like, how many deals per month would you say you're doing right now on average, Wes?
It'd be 1 to 2. We're not blowing the doors off of anything, and you guys know it's 1 month you might not get any, and then the next month you get 4, and you look back on 12 months and it's a 1.5 to 2 pretty average.
Now, did that switch in your years doing this from, because what I've heard a lot lately is people were very wholesale heavy, and now they've kind of flipped to being more flippers just because the needs of the market. Would you say that's also true where you're at?
Yeah, there's more and more flippers in Kansas City that I think or direct to seller marketing channels. There's still quite a few that, rely heavily on wholesalers for deals. But, I would still say that there's less and less buy and hold folks that you're going to sell to off market. It's either it's flippers or nothing.
Have you
really
personally flipped more then, or has it been basically consistent 60-40 the entire time that you've been doing this?
It just depends on what deals end up in the system. I like paint and carpet in a low days on market area so I can cherry pick them. And those are the ones that I'm taking down and doing myself. If it's, big heavy rehab, 100-year-old home, or it's in the hood, I find people that specialize in those properties and pass them off.
Cool. Yeah. And what's your team currently look like?
You're looking at me, the team. I do have a part-time VA, Christine. Got her through Rocket Station. She's fantastic. Nice. She started out doing just data, pulling stuff from county websites, collecting some of that data that you can't get through PropStream. But one of the reasons I hired her was because she had some experience on the phones with a previous company that she'd worked for. And it took me last year at KeysCon 2023, I think Dylan, we were in a small group thing, breakout, and talking about him adding maybe an AM, and it dawned on me that I had this gal that I had doing spreadsheet stuff that had phone experience. And so coming back from KeysCon, I immediately got her on the phone, and within like 3 days, she revived a lead, and that's the one that we're going to list on Thursday. So she revived it. The guy took a way better offer for me than my original cash offer. So he took the cash offer price and then gave me seller financing at 0% for a year.
There you go.
So.
Awesome.
There you go. Yeah, I remember that conversation, Wes. So it proves like the more people you have on the phone, and if they're even 80% in a competence level of what you feel, it's probably worth at least experimenting with that person, right?
Yeah. No, she's been great.
That's awesome.
How are you currently sourcing the deals that you're bringing in?
Everything's direct mail. So I started off 3 years ago with texting only, and then I added some cold calling, and I just didn't like the way that filled up my time with a bunch of like not very warm leads, and didn't feel like I wanted to work in a call center. So I started listening to Mike and Dan's podcast then, just because they really preach the direct mail thing. So I'm 100% direct mail now. You get warmer leads. It gives me more time, with being kind of a one-man shop, there's a lot of things you got to manage. And if you're just sitting trying to keep leads fresh from all the texting leads that come in, it's really difficult to do.
I mean, I like that you said that, because this is something that I really firmly believe in, but people always want to argue with me about it, because like, you're completely right. When you're balancing all the hats in the business, it's hard to perfectly maintain the pipeline, right? And so you realistically need to make sure that you are talking to as good of leads as possible every single time. And if you're paying for lead generation through SMS, cold calling, you're getting these colder leads, what happens is exactly what you just said, is you spend a ton of time talking to not warm leads. And with direct mail, sure, you're probably going to get less leads, going to be a little more expensive per touch, but there's so much more like certified leads, just with like the nature of how they're marketed to you and the fact that they reached out to you. But for some reason, people just latch on to the cost of it and like the cost of the lead. And I don't know if it's like a scarcity mindset or lack of belief in their own abilities or what it is.
And so they can post and make a reel and say that their cost per lead's $2.
Yeah, but who gives a shit if it doesn't any deals, right?
It's your cost per
deal.
Exactly.
No,
it's like you got to get it through the funnel.
No, 100%.
Yeah.
What's worse is like I'd have some of those leads I did, and they'll pull you. They'll like know they've had experience, and they'll be like, "Oh yeah, I'm the seller," and they'll lie to you, and then they'll waste even more of your time.
I know.
And or go out to an appointment to a house they don't even own. So done that before.
Yeah, we've had a couple of those too.
Yeah,
yeah. But on that vein though, how did you, I guess, recognize that those cold calling SMS leads like weren't doing what you needed, and you like? Were you optimistic going into direct mail from listening to us, or had you tried it before and you just hadn't like learned to scale it? But like, what was that?
I mean, people have talked about direct mail for years and years. It's one of those things like marketing, whatever's in vogue changes year to year, but direct mail is always there. People always do it. Texting was starting to get more and more regulated. I didn't want a business that was built fully on something that could just disappear overnight and not have another marketing channel developed. I think I was afraid of it because it was expensive. I had done, single campaigns like a lot of people that do direct mail. It's like, I sent out 500 postcards and I didn't get a single call. This doesn't work. And it's like, listened to you and Mike and Dan long enough and realized is like, all right, I just got to be committed. You know, it's whatever, 3,000, 5,000, however many per month, and just stick with it for 90, 120 days, and you'll start to get leads in. And, you know, it's basically essentially how it happened. Started in November, which is a terrible time to start because of the holidays. It's super slow anyway. But it took me till April the following year to get my first deal. But then I had consistent leads to work. They were much warmer and things started to kind of flow from there.
I love that, Wes, especially because I had a very similar timeline when I started online. So when you first started, you know, you're being consistent with the mailing, those leads started coming in. Do you think you had a lead problem? Did you have any issues converting some of those leads? Or do you know, like kind of the lead to offer ratio that you guys were working with at the beginning compared to now?
At the beginning, actually, my lead to offer ratio was, well, you call it low. I wasn't giving out very many offers and I was getting most of those deals. And I think a lot of that was just, I didn't have much of a pipeline. And like you spend tons of time underwriting it and like pre-vetting buyers. And like, you basically know it's a deal before you even offer, which knowing now what I know now, that's not how I operate.
Right.
There's far more offers than I did in the past, but I just didn't have that many leads to work. So you sit down, you know, you got 8 to 10 hours today. What are you going to do? You're going to underwrite the hell out of this deal. You're going to figure out everybody that buys in that area, what they've been buying at, and, you know, basically put the whole thing together before you put out an offer.
Yeah, and then just to get shot down anyway because they don't want your offer. Yeah.
Oh, yeah. The worst thing is when you're new and you finally get a contract and you're like, oh, I got a contract. This is a great deal. And everybody's like, nah, no deal.
Yeah.
And it's probably still a deal. That's just part of their negotiation, but it's just so defeating. It's like,
yeah. I mean, and the funny thing is, you know, it's fine. I did an Instagram reel kind of about this today is when you're starting out and you do have kind of that scarcity mindset around opportunities, you don't have an abundance of them yet. Right. We all, like every person who gets into real estate kind of does it the same way where you focus on the house, you learn to analyze the deal. You go and you get like the deal analyzing calculator. You sign up for Bigger Pockets Pro or whatever. So you get their fancy calculator, which is basically just an Excel spreadsheet that's on a web page, you know? And then when you get a deal that comes in, you like analyze them forever. And like, even now, I don't know if you guys do much dispo to like newer people, but they'll be like, I need until this evening to analyze the deal. I'm like, what the fuck are you looking at? Like it should be a 15-minute process, honestly. Totally. And realistically, what you should be doing is be spending that 3 hours analyzing the deal, calling more sellers, right? Or like, you know, doing something to generate those leads.
It's funny because now that you like, and Wes, this is probably true for you too, but if I know the zip code and the like bed, bath, and like style, I can pretty much tell you it's a deal right off the bat. Like,
yeah. You start to know really quick. Or do you guys where you guys work? Do you have like the spec homes from like the 40s, 50s, 60s, 70s sort of time range? Where there's
not
like
really
basically,
a thing here.
It's not really a thing. Okay, so here we have that majorly. Do you have this where you're at, Wes? Where there's like the same house that is like by block?
Yeah.
Like we've had them up here where like based off of where it is, and if I know the square footage, bed, bath count, I know what the house looks like. Right. Because I've walked so many of them. And I remember when we would bring on new AMs locally and they'd be like, oh, yeah. So like you kind of go down the hallway. I'm like, yeah. And there's the bathroom kind of in like the back on the left. And then you go down the stairs and there's probably a bedroom kind of tucked underneath the stairs. And they're like, yeah, have you like seen this house? I'm like, pretty much. I know exactly what it is. Yeah. So then I guess as you were going through as a single person operator starting to grow, you know, you're getting into those zones, over analyzing all that sort of stuff. How did you like sort of start to optimize that sales pipeline to be able to start taking down more deals more efficiently while also managing your flips, while also, you know, working on dispo and everything else?
A lot of it just comes from experience. And I mean, like I said, I didn't have a ton of leads coming in from cold calling or texting. I had my direct mail leads. And in a month, you know, when I was sending out 3,000 postcards, I might get 7 or 8 leads. You know, that's not a lot to work. So I would underwrite deals. You know, I'd look at other, you know, wholesale deals just to kind of understand neighborhoods and stuff. But as things started to pick up and you started to get more leads, like you just have to become more efficient and build out processes I'm still not great at like having SOPs and processes. Like when it comes to dispo, I feel like it's just like start calling anybody and everybody, and then 3 days later, it's like I don't even know who the heck I've talked to about this deal. It's like,
yeah. Well, Wes, I'm curious. Like now that that's like the beginning, what does your kind of day to day look like nowadays?
Generally, I get down here, start around 9:00. Try to clean up the CRM with, if I'm out and about looking at flips or projects, you get calls that come in. I still answer all my inbound calls. So I'll update the stuff in the system, get names and notes and all that stuff added, close out open leads, do all that stuff, and trying to have tasks for every lead in my system. So I'll, start knocking out tasks, whether it's follow-up calls, underwriting deals that appointments or something that maybe I looked at a day or two prior so I can get offers out. And it's just trying to work through all that stuff.
Do you use RE Simply?
I do. I did not at the beginning, and I just switched to it probably a month or two ago, and it's been, Mike's smiling because he knows I should have done it a year ago.
Well, I'm asking a follow-up question is like, so did you use just like the default tasks that they give you, or have you created any of your own during that sequence from, no contact made, appointment, due diligence, offer, et cetera?
I've got a couple just kind of whatever the template tasks. And basically that's just like if I make a call or send out a text and I don't get an immediate response or they don't answer, it's set up for check the next day. Did they respond? If they haven't, check in again. So I've got a handful of them, but I haven't gotten really deep into like the automations and templates and stuff that you can do in here. Just, again, got a lot of plates spinning right now. And that's one of those things that needs to be done, and you just got to find time to get it done.
Yeah. So as a single person operator doing the sales, managing your flips, going appointments, how do you I would say manage your time? Because you have the area that you live into is also not a small geographic area. Going from Kansas City, Kansas to Kansas City, Missouri, that's quite a stretch. I know you're going to that northern market. How do you make sure that you're actually staying on top of everything? Are you going to the flips as well still to manage that, or do you have a good contractor?
I've got a good contractor, but I end up there a fair amount. This one that we're listing Thursday, I've been there doing some punch list stuff just to get some of that. I would say if I had to describe how I manage my time is poorly. When I'm going up to St. Joseph, I try to schedule all of those appointments the same day, and I may be up there for 6 hours, just appointment after appointment. So they're not getting hit the day the lead comes in. I'm not going to walk them. It's a less competitive market than Kansas City. Kansas City, if I get a good lead that comes in, I may be out there that day just because it's that competitive. Sure. But it's just a matter of, if I've got an appointment, I run it, try to get back to the house, get through my tasks. The main goal is to get through all the tasks that you have in the CRM for the day and set the new tasks whenever it is, next week, next month, to do those follow-ups just to make sure you stay on top of
Wes,
the
if you get a hot lead in Kansas City or something like that, are you to the point where you feel comfortable filling out a contract and offering on the spot? Or are you still going back, running the numbers and give them a call later? Okay.
I will. There's a lot of, as you know, there's a lot of feel to how that phone call sounds, whether or not they're going to be receptive to an offer one bit. And like Mike said, what the house looks like before you even walk in it, or no person. There's a lot of folks that market in Kansas City that are completely remote, whether they're out of state or out of the country. And they do a lot of calling and texting. And so sometimes folks just want to see that you exist and you can get there within 30 minutes because they've dealt with some of these other companies that I would bet have a 50% plus fallout rate on the contracts.
Yeah.
Just the way that they operate.
And that's probably more true in a market like yours that's a little bit more competitive. But even my accountability squad inside of the scaling community today, we were literally talking about, do you make the offer of the phone and only walk the properties that you lock up? Or do you actually go to the appointment, get that rapport? And I'm very much on the latter side of this. And I think that's helped me close deals. But is it the most scalable method? Probably not. But it's going to be very dependent on your market and the seller, honestly.
I was going to say, I've tried the not walking it and giving out offers, and I didn't feel like I was having much success there. So I've kind of stuck with the walking the houses and just getting those reps in, building rapport, person to person. I enjoy operating that way. And again, it's not the most scalable. In the future, I'll probably have to hire an AM to do that. But that's how I like to operate, and has worked best.
Yeah.
For
Well,
me.
honestly, when you're a small operator, that's the best way to be competitive, because there is something to be said for that, like soft touch or like the personal touch. There's a reason that like people start to scale their businesses, like we know a lot of people, you guys have heard them on the show, that have scaled to 10, 15, 20 deals plus a month. They start to get dropping rates of 20, 30%. It's because you kind of need to be shooting more shots. You need to be making offers slightly faster, slightly unseen. When you're a smaller operator, you're not getting quite as many leads in. You have less chances at goal. You need to be like more clinical with them, right? Otherwise you're going to struggle to get by. So what do you think is your main thing stopping you right now from, you're doing 1 to 3 deals a month on average to going to 4 to 6 or 5 to 8 deals a month?
Just be marketing spend to get the more leads in, obviously. And then, I think I've got a mental block about dispo and my confidence in dispo. I've got a handful of pretty good buyers. When I get stuff that doesn't fit inside their buy box, I get very conservative in my underwriting, and I don't get stuff doesn't pencil for me, and I'll see it. It'll transact. Somebody in town's doing it.
Yeah.
So,
well, I guess let me ask you this: do you have the desire to build like a 5 to 8 deal a month business?
Yeah, I do. If it frees up my time, like I don't want to do 5 to 8 deals just as a one-man shop
hard.
with a VA or two.
Hard.
Yeah.
So, I mean, if the number one thing is spending more money on marketing, why don't you just increase your marketing spend?
I could, yeah.
Is that on your 12-week tracker that's right behind you from KeysCon?
No,
it probably should be.
It's actually not. So where I've found myself right now is like most of my deals have, and I've talked about this, is this super long tail on where your money comes back in. And so I had one deal that another guy in town, like I was under contract with him, and he said that the lady called them and wanted them to come look at the property and blah, blah, blah. Well, their guy said, well, we would have offered this. And she started crying. So he signed a contract with her, and for 20 grand more than I offered her. And I don't know. So I called the guy, we talked it out. I've got a JV deal on the back end of his deal. So I stepped out of the way, but we've got an agreement where I'll still get paid. So I'm waiting for that to close. I've got these 3 flips that I'm waiting to close. It's just like waiting for this revenue to come in. It's the cash crunch that we always find ourselves in. And, here in 6 weeks, I'll be sitting on a pile of capital, I hope.
Yeah.
I hope everything's closed out by then. Yeah. And then I'd feel more comfortable, pumping it into the back.
And this is where it's determining, do I wholesale or do I flip it? It's not just a house thing, a property thing. It's how much capital do I have? What's my outspend look like? And it's almost like accounts receivable versus accounts payable type of situation, because if you need money fast, you're more likely to wholesale that deal than you are to flip it.
Right.
Yeah.
Right. And I would love to wholesale more. And again, this is probably this mental block of my dispos. Like, I'm in it too high. I can't find a buyer. Screw it. I'll close it. I'll flip it myself and I'll make money. It just takes me 120, 180 days to get my money back. When if I would have just put my head down and made more calls, I probably could have.
So Wes, let me ask you real quick. What does your dispo process kind of look like right now? Is it just Facebook groups, email blast, or what is it?
So yeah, I get a lot of contacts through Facebook groups. I'll reach out to them. I've got, phone numbers from meetups. I'll call agents, like when I'm trying to unload this buy and hold property. So I've been calling property management companies up there, to try to see who they have that is still buying in this market. But yeah, it's basically connections. A lot of it's through Facebook groups, finding people that have responded to other posts in that same area code or a similar type property, and then reaching out direct.
Yeah. You probably know this, but maybe for the audience, something I've had great success with dispo is price is the number one determinant, but the second is proximity to that property. So if you can use PropStream or Investor Lift and find the cash buyers who have bought in within a mile of that subject property, reach out to every single person on that list, and they are more likely to buy it than maybe someone else.
Yeah, I actually had one of those earlier this year, similar situation. I just found the right buyer. The guy's son lives 3 houses up. They really liked the house. They wanted their other son to live next door, and he paid me probably 10 grand more than anybody else would have.
Do you have one of our Investor Lift seats, Wes?
I don't. I've asked about it several times, and then I just
forget. Yeah.
Keep trying to do
Mike,
things.
You heard he's going to have a pile of money here pretty soon, so you can ask him here in a couple of weeks.
Yeah.
This is like the Simply thing. You're sitting over there shaking your head, and a year from now, like, I should have done that.
Oh, yeah. So we have a basically community Investor Lift account for the Scale community for people listening. And we've had great success finding buyers on there because they have like their God mode functionality with like the tier that we have where you can just go and see everyone who with verified contact information who's bought properties in the immediate area. You can see what they bought, what they paid for it, what they did with it, if they flipped it, how much money they made, all that sort of stuff. And so it's really powerful system, which will help with your dispo a lot.
Maybe I'll get this St. Joseph deal moved that way.
Yeah, there you go.
On the cash crunch question though, I just wanted to dive into that a little bit more. How do you like balance the operations with no paying yourself? That's one of the biggest questions we get asked all the time is, do you pay yourself a salary? Are you taking distributions? Do you give yourself a profit share? What does all that look like?
So last year, basically the only thing that went into our bank account was the commissions that my wife made on the flips of our flips. Everything else that I made stayed in the business. I made myself a nice little profit first spreadsheet this year, and I've got what I should have paid myself, but I still haven't taken any money out of the business. I was fortunate to have a fair amount of money saved before I started doing this. So I've just continued to live off of that savings, and, we replenish it every once in a while when we sell a flip. My wife's commission goes in there, and I've left all the money in the company. Yeah. I will take distribute out.
But yeah, it's such a challenging thing. And I don't know if it's like all businesses, because most of my experience is with real estate investors, but I think it's because it's such like a capital intensive business that has these potentials to, I don't know, either have a bunch of opportunity all of a sudden or have like a major expense all of a sudden that kind of wipes you out. We have this inclination to like want to keep a bunch of capital in the business and available. But if you think about that fundamentally, it honestly kind of throttles you a little bit because it gives you like a way out, right? Rather than forcing you to like be a little bit crafty or to like make more money, and a lot of the like smart entrepreneurs that I've like much more successful than we are that I've met over the past few years is they kind of live by this mantra of like, you want to have as little capital in the business as you need to, right? As you can to like operate, and maybe like a tiny bit of reserves in case your receivables are late or things like that. But otherwise you should be paying yourself and should be putting it towards something. I mean, even if it's like sitting in a treasury, right? Where it's like making something and not just like sitting in a bank account. And then if you need to make an investment in your business, that's fine. You go ahead and do that. But to just like leave it sitting there, I don't know. It's like a little.
Even anecdotally, if I know I have a big month coming, I'll maybe chill and like not be as aggressive or hit the funds as hard.
Yeah.
So there's something to be said for that.
Yeah. But obviously everyone's risk tolerance is different. It's just always interesting to me to like dive into the psychology of where people are with that. Because the funny thing is I'm the same way. Like I've had in my little rental reserve account for my own personal rentals, I have $150,000. It's been $150,000 for like 2 years.
How many properties does that include?
So that's like my own personal rentals. So now it's 6, right? So it's
to me, that's a lot.
It is a lot. That's what I'm saying. It's way too much. Like I shouldn't have that in there, but I can't get away from it. I don't know why. But so,
my intention was once I got to the end of the year, and it's never going to happen this way where all the money's back in, there's no projects, that I would pull everything out except for whatever the $40,000 worth of operating capital that I feel like I need. It's, whatever, 3 months worth of operating capital. And we would start every year that way. But it never works that way. It's going to be tied up in a project or something.
Yeah.
So
yeah, because you have to take the opportunities when they present themselves.
You do.
Right. It's not just like, it can't be a perfect world.
Yeah. So, do you mind if I ask, Wes? I'm curious. You don't have to share if you don't want to. You don't have to answer if you don't want to. If things go out the rest of the year as they have been going, how much money do you think you'll make this year? Kind of like top line?
We should be somewhere 2 to 250, I would think. Yeah.
250. Okay. Yeah. So, I mean, like that's, relatively lean if you have marketing expenses. So, and then what's your current spend on marketing?
5,500 to 6,000 just on mail. My overall, I'm probably 8K in overhead between all my systems and my VA.
Question: do you do anything with your return to senders?
I tag them as RTS in the system. I haven't skip traced and called them. I should probably get my VA to start pull that list, skip trace it, and have her start calling them. I need to get better about managing spends there.
That's a very low dollar per hour task for something for you to do. If you're spending out that kind of marketing spend, you're getting several hundred return to senders per month probably.
Oh yeah, I've actually got a tote here because when I switched over to Resimply, everything moved over and I didn't pull out the RTS tag when I sent my mail, so I got like 1,900 RTS on my last mailing campaign.
It's funny. I just pulled up my I have a break even analysis on my computer. It might not be totally updated, but if I put in $3,000 a month in marketing spend, it's about 5,500 or 8,500. So about the same between all the subscriptions, all the stuff that you have on the back end.
The 250. So if we say 250 top line, and with the current spend, so you have about $150,000 left over. That's like a 60% profit margin business, right? I think the biggest thing for you is like it would be super uncomfortable for you to do this at the start because like the numbers themselves aren't that big yet. But if you can increase that top line, 2x and go to a 50% profit margin business, that's like 200% more money for you, right? With a a ton more opportunity for upside and capital availability to be able to remove yourself from the business a little bit. So I know it's not on your tracker. Yeah. We should,
I doubled my mail spend this year from last year.
Okay.
And so far it's been tracking because last year was like kind of a deal a month. I think we did 14 deals total. Mm-hmm. 5 of them came within like a 10-day period. Like I signed 5 of them and it, one of those like moon phases. Like everybody that called wanted to sell and was willing to do it at a reasonable price.
Nice.
So intention is to do like 18 to 20 deals this year. The assignments have been better this year than last year. I just got to build out that dispo and feel more confident in it. I'm getting the opportunities. It's that lack of confidence on the dispo side that's in the ego of like having to cancel a contract if you're into it too high. Like
it's not so bad once you get used to it. Be transparent and go with your, honor your due diligence and don't screw people over. People always get super tied up. That's probably one of the top questions I get asked from like new people. I always love when I get asked this question from somebody that's like, hey, I'm going to start wholesaling, but I have a problem. What happens when I get a contract and I can't find a buyer? I'm like, go worry about getting the contract first. Don't even worry about that part. But people always stress about it. And I mean, I don't know. It happens in real estate all the time. It happens in other businesses where a contract needs to be terminated because one party can't perform. It's just part of the business, right? And ultimately, if you're not being malicious about it, you're not leaving somebody in a worse situation. You're not using it as...
We've just been trying to get offers out of folks. So if I do have to go back and price drop, like I have somewhere to anchor off of, but it's like the worst thing to do is go price drop somebody and then cancel.
Yeah, no,
2
exactly.
weeks later because you still can't.
Exactly, totally.
Yeah, what we'll actually do is we'll get it assigned at like a lower price. So like, let's say we have it for $250 and a buyer's going to pay us $245. We'll assign it at $245 with our $250 contract, have the buyer pay earnest money, So their money's in hard. And technically for the deal to go, we'd have to bring $5,000 to close. Then we'll go renegotiate with the seller. If we're not able to renegotiate, then deal's off. So I wasn't able to perform, whatever. Buyers usually understand that, which return them earnest money. If we are able to, the buyer's already locked in. And so that way you're not getting like a verbal, like I'll pay $245 and then you do the price drop. And then then the buyer's like, actually, I don't want to do this anymore. And then,
well, Wes, before we dive into the last like 3 questions, I just got one overall question because I know you have 2 kids at home. How do you just manage like life, you know, and like the whole work-life balance relationship that everyone likes to preach about?
I would say that's probably the hardest part of it. My old W-2, I would leave the house by 6 a.m. I'd get home at 5. So I was leaving before the kids or the wife woke up. And then I'd see the kids, you know, for a couple hours before bed each night. So now I'm home, you know, I get to make them breakfast, get them off to school. I can go pick them up from school. But then, you know, dad's also available. Like right now it's summer. They're both home. They're at summer camp this week. But it's like during the day sometimes it's just you got to, you know, lock the door and say, give me some time. I got to make phone calls. But it's difficult. And I'm trying to get better about time blocking and, you know, just letting them know when I'm not available. But it's just part of, you know, doing this business that we do is you have to be super flexible on times. Like last night at 8:45, when I was getting the kids to bed, I was getting text messages from a lead that, you know, entered the system back in February and she's ready to sell now.
Right. You almost have to be on the leads schedule sometimes, which is hard to do.
Yeah, it is. It's like leaving to go walk appointments at 8 o'clock at night when normally everybody's going to bed at 8 o'clock at night. Right. But my wife's super supportive. She's been fantastic throughout. She was, you know, biggest cheerleader getting me to do this on my own. Honestly, if it wasn't for her, I'd probably still be sitting in my cubicle just gutting it out for the next 20 years. So.
That's good, man. That's huge. Having a significant other that's on board. You know, I know Mike's the same way. My wife's the same way. So it's definitely a big piece of it.
Mm-hmm. Yeah. But awesome, man. Well, good stuff. All right. We're going to dive into our end of show questions here. Thanks for coming on the show, man. It's cool to sort of hear you know, going through the struggles that we can all relate to on one level. We were all there not that long ago. Like it's funny, like even me, that was really realistically, I was in the same position as you, I don't know, 3 years ago at this point. We had like literally just fired our first AM and we were trying to figure out how we're going to make more money. This is about the same time where Dan and I were back to taking sales calls and trying to piece it all together before we were able to get things ironed out again. So what's your first question is, what is your craziest real estate story? This is always the classic question for the podcast. And this can be a crazy tenant, crazy deal, big win, whatever you got.
I'd have to say, I mean, I was a deal deep dive or case study show with the Carol Baskin story. I mean, if you do what we do for very long, like you just kind of get jaded or like desensitized to some of the crazy shit that you see. And it's like, oh yeah, it's just kind of normal life. Like, you know, a guy showed me a house up in St. Joseph. He's like, I'll show you the 3rd and 4th bedroom. And we went downstairs under this 120-year-old house. The ceilings were 5 foot high and the floors were dirt and there was beds down there.
Yeah.
And kids were sleeping down there. But it was perfectly normal to him. He was walking me through the house like he was a showing agent. Like, yeah, let's go check out the 3rd and 4th bedroom. It's a great place. Look, you safe from tornadoes. You know, we're in Tornado Alley.
Yeah, right.
But the Carol Baskin thing. There was a murder for hire plot. There was blood on the door. Her name was Carol Baskin.
So wild.
Her ex-husband was like a police officer, ex-special forces guy. Just crazy. And then I think I spent more than 16 hours on the phone with her, 300 some odd text messages to get the deal done, and finally got the deal done, I think October of last year. And they found her DOA in her apartment like 3 weeks later. So
that's the crazy ending that we didn't hear when we did that.
Yeah. Do you know
what happened?
I don't know. There was this through line of all of her stories that she was like working undercover to like shut down doctors that were prescribing pain meds. I think she partook.
Oh.
And I think that might've been what got her. I don't think she was working undercover. That was the story she probably told herself to go in.
Yeah. How are you supposed to catch them if you don't know what they do?
Yeah.
All right. It was Strange story.
Wow, that's a good one. That's gonna be up there,
man.
Wes, if you could go back to the very beginning, what's one thing you would do differently from the start?
I probably would have started with direct mail earlier, just as a marketing channel, because I was nearly a year into my journey before I started it, and then you got that kind of 3 to 4 month ramp up period. So I was 16, 18 months in doing it full time before I really started to get that pipeline built from direct mail.
Totally.
And, I started mailing my texting leads. I pulled that, and I did end up getting a deal from it. But, it would have been nice to have 18 months of warmer leads already in the system. And, I had the capital set aside to do it. I was just afraid. It's really hard to earmark 25, 30 grand and say, I might not get $1 back from this. You just got to have faith about it and scale. That's very typical. Like, you may spend 3 or 4 months of spending money sending out mail before you get that first deal. But by the end of that calendar year, I think my return on marketing spend was like 3 to 1. It's not great. I know a lot of guys get 5 to 1 on direct mail, but all the money came back and it brought some friends with it.
3 to 1 is still a good metric. Like, if I asked you if I'm going to give you $100 and you're going to give me 300 back, I'd do that every day of the week. So,
yeah, totally. Yeah. Just building off that really quick. So somebody was going to start with direct mail. They go back, they're in the beginning of their journey, they go on to start with direct mail. What should they spend their time doing, do you think, while they're waiting for those leads to come in, or they're trying to ramp that up over the first 6 months?
Where I'm sitting now, I would say start building out buyers lists, go talk to people. Don't be afraid to tell people what you're doing. At the beginning, when you're just sending out mail, it's like, I don't even have a single lead yet, but tell people that you're, marketing direct to seller, get information from them, build that seller pipeline, learn how to underwrite deals if you don't know how. There's going to be wholesalers in your market that are sending stuff out. Get on their list, look at what they have, kind of back into their numbers. So when that lead comes across your desk, you know what to do with it, or you feel pretty comfortable. You're not trying to learn everything right there, because that's pretty nerve-wracking. And you'll end up wasting a bunch prepared.
Yeah, totally. Yeah, that's probably one of the most important things people do is they start getting those leads that come in and they are shocked that it actually worked, and now they don't know what to do next, right? Or they have zero plan. Even if you aren't sure, like, have like 5% of a plan. It's better than having nothing. Awesome. Where can people find you, follow you, and reach out to you, Wes?
It is back here is posting more on social media. That did make the 12-week planner, although I think I've done it maybe 3 or 4 times. But it's Wes, W-E-S, Steimel, S-T-E-I-M-E-L. And that's on Instagram, and Wesley Steimel or Wes Steimel on Facebook as well. There's not a whole lot of us out there. Pretty, it's not a generic name, I guess.
Yeah, it's a generic name for sure. And you guys, if you guys want to buy any deals in the Kansas City market, because you can tell Wes is really struggling with dispo, so you can come and lowball the shit out of him on some of these.
Give me an offer.
Right,
I'll go back
and he will happily sell
to
you.
Give me an offer.
Exactly. So don't be afraid to reach out to Wes on Instagram, guys. Let him know you're looking to buy in the market. Let him know you're in that market. I'm sure he'll be happy to connect with you. And dude, thanks so much for coming on the show. We really
appreciate it, guys.
See you, Wes.
Thank you.